There are fears today's rate hike will take some families to breaking point. Let's bring in the McCarles family from Perth, Corey and Sarah. Good morning to you guys. Thanks for being with us this morning. Appreciate it. How are you all feeling?
Yeah, getting there as best as we can, I guess. It's hard, so you just deal with it a day at a time.
Tell us about that, because I don't think you're alone. I think there are a lot of Australian families right now looking at this going, how on earth are we going to pay for it, Sarah?
Yeah, well, it's definitely been hard. I built the house in 2016 and then it was like, I don't know, less than 3% I was paying for about $1,400 a month. Now I'm paying 5.3 or 5.4%, and I only refinanced back in August at 3 point something as well. But half of my wage alone each fortnight goes on just the mortgage. And we're pretty much using Zip for every other bill, say like our water bill, car rego. It's just getting really difficult to actually manage all of it.
I'm sure, like everyone else, loading up the credit cards, they've all got to be paid off, don't they? I mean, that's just a reality. Have you had to make any sacrifices, you two?
Yeah, we've had to make quite a lot of sacrifices in terms of the car mechanical side of it needs to be serviced. We can't afford it. It's an $800 bill we can't afford. In terms of food, we've had to scale back on food of what we can buy. Medications are going unpaid for, which need to be bought because they're just unaffordable now. We're more focused on the mortgage, being the fact that half of Sarah's wage is now gone on to that mortgage. If it goes up much higher, we're at the point now of deciding, do we sell or do we try and roll the dice and battle on to the very last point that we can't?
And you're selling.
Mr. Phillips has got his head up his arse, square and fair.
I was going to ask about that. Well, not that specifically in that detail, but I completely get what you're saying. How do you feel about the RBA and the increase in rates, given where you're at? And I can see in your eyes the pressure. I can see it in your body language.
The pressure's there, but I'm speaking on behalf of all Australians when I say this. Mr. Phillips has his head up his arse, square and fair. He doesn't know what is going on in the realistic world. He's looking after his mates in the ivory tower and he's looking after the big ends of people. The banks constantly just hand down the interest rate, but where are the savings? No one's getting that passed on. People are struggling. You know, they're putting families on the streets. Kids are literally living with grandparents because the families can't afford, because the parents are both having to work FIFO just to keep the house alive. So the kids are missing out. Everyone's missing out. They're living in tents. They're living in caravan parks. Where Mr. Phillips is saying, oh, well, Australians ain't getting hit hard. They are getting hit hard. My question to him is, when is he going to realise that people are struggling? When is he going to realise that no one can afford this anymore? He needs to start looking at the bigger picture and going, hey, we need to back off here, because the Prime Minister's not doing anything. He clearly doesn't care anymore. We need someone to stand up that will stand up to Mr. Philip Lowe and say, hey, enough is enough. Australians can't afford this. This isn't the dinosaur world anymore. This is the modern world of 2023. We're not living in the 60s. We're not living in the 70s, 80s, 90s. This is 2023. People can't afford it, and they're living on the bottom dollar. You came out and told people, we won't raise the interest rate rises. Go out and buy a house. You went on national TV, you told people this, and then you came out and did the exact opposite after you had us all into a barrel and you started shooting us in a barrel. I said, so for me, that's financial deception. If I didn't done that in my own business, I'd be before a court system and facing jail time. But somehow he's the Reserve Bank and he can get away with it.
All right, I'm going to get in enormous trouble if you say that again about Mr. Phillips. So why don't you?
I love you, Carl.
I love you more, Sarah. How are you coping? I mean, it's literally having a huge impact. A real impact, a quantifiable impact and an emotional impact, all of this on Australian families. There's no doubt about that.
Yeah, it definitely is. As I said, I feel like I'm pretty much working just to put money in everyone else's pockets but mine. And we even tried, it's hard because we're on a variable rate, and we've tried so many banks since August, and we've got an amazing broker. And no bank will touch us because apparently I don't earn enough on paper, yet I'm paying the mortgage.
There you go.
Every time it hikes up, I'm proving that I can pay it, but apparently, yeah, I don't earn enough on paper.
All right, hang tough and stay in touch. It's good to have you on our show, vocalising what is going on out there in real Australia. It's been lively, and I've enjoyed it.
I would
as much as we
challenge.
can.
I would challenge Mr. Philip Lowe to literally come out and spend 90 minutes in a TV studio with all Australians and take hit-fire questions. But I guarantee you won't.
We'll
he doesn't
ask.
have the balls to do it.
We'll ask. Good on you guys. Thank you. Appreciate it, Sarah.
Thanks, Carl.
Yeah, Corey, not holding back there, summing up how many Australians are feeling. Let's bring in AMP senior economist Diana Messina for her analysis. Diana, thanks so much for your time. Now, we've just heard from a family in Perth and the impact this is having on them. This is something that's echoed, obviously, across the country. Do you think the RBA is out of touch here?
Well, the difficult job for the Reserve Bank is that they need to look at the economy as a whole from a macro point of view. And unfortunately, the inflation data has just been too strong. So as the central bank's mandate says, they have to get inflation within 2 to 3% over the business cycle. Inflation is running at close to 7%. So on that measure, the RBA needs to hike rates more from here. Now, we are of the view that we're only going to get one more hike, and that will be in today's meeting.
I guess that's the conjecture, though. Like, you're saying one more hike, others are saying more hikes are needed. We know Bill Evans has said that on the front page of The Australian today. From Westpac's perspective, he thinks that we need more, otherwise we're going to see the levels of rate rises that we've seen in the 1990s, which is something that no one wants to see. So why is there such a difference in opinion there?
It ultimately comes down to how much impact economists or commentators think there will be on consumers. And this is where the difficulty lies. In the past 2 years, consumers have accumulated a huge amount of additional savings, thanks to all the transfers that were given from the pandemic, from both the government and also the Reserve Bank interest rate cuts. Consumers themselves decided to save more and spend less. So all this savings is helping to cushion the impact of some of those rate rises. And then, of course, you still have a large chunk of households, about 35% of those with a mortgage, who are on fixed rates. So they may not feel the impact until those fixed rates roll off. And we know that a large chunk of those will roll off in the middle of this year.
Yeah, but what
so there are a lot of these positive factors.
Sorry, Dana, go on.
There are a lot of these positive factors that are helping to keep consumers afloat and are cushioning the impacts of some of these rate rises. So the RBA is looking at this and they're seeing that retail spending was still holding up pretty well by the end of last year, which is helping them to justify these further interest rate rises.
It seems as though that's not enough, though. I mean, like I said, we've just heard from those who are suffering. They don't know where to turn. This isn't going to help them.
Well, this is the unfortunate impact of unequal impacts of interest rate hikes. We know that the groups that are most affected are those with a mortgage. About a third of Australians have a mortgage, and it's really going to impact those households, I would say from my analysis, under 45 years old that have taken out a loan in the last 3 years, and that makes up a large chunk of new lending, that haven't built up those prepayment buffers, that haven't got as many savings compared to some of the older households that have had a loan for a longer time, and that have probably taken out loans that are larger as a share of their income. And those are the ones that are going to struggle the most, as we heard beforehand. So this is really where the impact to the Australian economy is going to lie. And I think that we are starting to see the impacts of those rate rises come through. We've seen the retail spending data not be as strong as it was in January. Wages growth is starting to slow as well, or not rise at the same pace as the RBA would like to see. So I think that we are getting close to that RBA pause from here, or at least I'm hopeful of that.
Hey there, Today fans. Sarah and...
What's my name again?
Oh my goodness, Carl.
Hey, thanks for watching our YouTube channel, though. Subscribe now for more news, special reports and amazing Aussie stories.
And Carl misbehaving,
Whoa,
of course.
that never happens.
Always happens.
What's she talking about?
Always happens.